Hi everyone. Thank you for joining us. My name is Jordi, and I wanted to talk to Michael Tucci again today. Mike, how are you doing? He is the CEO of Lexington Wealth Management.
Doing fine, Jordi, considering everything.
I can see that you came back from your little hyena in Maine. That you were escaping all this, and you're back into civilization in Winchester.
Exactly. I was up there working very diligently for 3 or 4 days in a row with my family back here, and I got the heave ho. My wife said, "Come back to civilization. We need you." So I'm back here in Winchester.
I know I'm a little jealous. Social distancing just happens naturally up there.
That's
um, well, the specific reason we wanted to chat with you today was twofold. One, I consider you to be in a little bit of a unique position with the background that you bring to the table, being an entrepreneur and a business owner several times yourself, and also being in the financial markets in this industry that is kind of seeing a little bit of a dynamic that hasn't happened in many, 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 many years, which is an emotional side of things, a financial side of things, but also, a group of entrepreneurs where they're trying to figure out how to keep their employees, how to keep their purpose alive. So I think you're in this very, very unique position. So I wanted to start by telling me what has been your experience in the last 4 weeks that has reminded you of the importance of your last 20 of being an entrepreneur?
interesting.
Interested, right?
Okay, you switched it up on me. Okay, this is good. So I'm thinking on my feet. So brief background. I grew up outside of Boston, blue collar family, worked my way through college with a bunch of different businesses that I owned. Paid for Bentley College, or it's not Bentley University, but it was Bentley College.
University, please. University.
I went to the college, not the university, and paid for it and had money in the bank when I graduated. Right?
Yeah.
It was interesting time. Tuitions were cheaper, but just was always an entrepreneur. Worked in one of the international public accounting firms. From there, a brief stay in industry. Then I started an accounting firm, grew that up to a pretty good sized firm. Sold it, went to graduate school along the way, and co-founded Lexington Wealth Management back in, we always have a debate in the date we founded it, or co-founded it. But it was basically around 2000, 2001, we co-founded Lexington Wealth Management and grew that business up in our knowledge. Got some more credentialing along the way. But so I've been financial advising in Lexington Wealth since 2000 and as a CPA for a decade and a half prior to that. But along the way, I've always loved being an entrepreneur, and I've joined a number of entrepreneur groups. I've joined Entrepreneurs Organization for about 15 years. I've been a member of that, forum member, briefly on the board, a sponsor, and a part of Vistage for the last several years. So within my DNA, I like being around entrepreneurs. We have many things that we share, many things that we have in common. Although we all have different businesses, a lot of our problems are the same. So with that, I love serving entrepreneurs as clients because they're unique, interesting people for me to be around. That said, there's a bunch of blind spots that I believe entrepreneurs have as it relates to their personal finance. On the business
and to be
side,
honest, that particular topic is something I was not expecting when I started working at Lexington. I always thought of entrepreneurs being very aware of a lot of things in their surroundings because they're successful in what they do. But as I've learned through you and through working with the people at Lexington is that, yes, there is a lot of blind spots. And I think we have become a little bit of experts at that.
yeah, so entrepreneurs will know their business KPIs. They're on
Yeah.
top of it. Even when this last crisis occurred, a bunch of entrepreneurs I'm in business groups with, I mean, they were on top of a plan, right? They were looking at the business, looking at their employees, the headcount, what they need to do, not do. The CARES Act, they quickly got on top of the CARES Act and jump on top of that, and so on and so forth. That said, the connection between the personal wealth they've built along with the business wealth, there's not a solid connection. The business side of it seems to be preeminent. And I get that for an entrepreneur starting out because their personal wealth is not much. But for an entrepreneur that's been around for a while, their personal wealth has been building. Sometimes there's a close relationship with the business. But in addition to that, there's also an independent personal wealth piece. And the connection between the two seems to be lacking in many cases. Not all, but in many. And I think that's an opportunity for a lot of entrepreneurs if they could spend a little bit more time speaking with their financial advisor about how their personal wealth relates to their business as well as their personal.
Yeah, I actually think this has come on very obvious in I would say the last 3 or 4 weeks through some of the short-term cash needs that their own businesses have been having. I think we have heard the desperation sometimes the lack of the options that they have that they don't even know they have,
Totally agree.
because there's no connection between how they operate in their personal life and how they operate in their business side. And I'm sure you have seen this too.
Sure. Do you mind if I give a couple of examples?
Yes.
Okay. So, it's funny. Someone who I really respect in the financial services industry made a comment. And the comment was during this crisis, your money is like your face. You shouldn't touch it. Right? And when I think about that in generic terms, not such bad advice, but let's think of the entrepreneur. A number of entrepreneurs I know that have financial advisors will ask me questions about what their advisor is doing or not doing. One
Yeah.
friend in a group said, I called my advisor. I didn't want to call him because I didn't want to know how much I was down. And I said, everything's okay. And the advisor said, yes, it's okay. And he asked me what I thought. And any more advice? He said, no. I said, okay, when that call was made, was on that Thursday in March when markets were down in the mid 30s,
Yeah.
equities, and even municipals were down close to 10%. Right. So there's a lot to talk about. So my advice to entrepreneurs is speak with your advisor, call them, let them earn their pay. Let me give you a couple of examples. So within a portfolio, hopefully the portfolio is well built, and it's an art form. Some people will take some exception with how a portfolio is built. But more importantly, first of all, liquidity. You're probably not getting paid anymore from your business or getting paid very little. So you got to think about your personal balance sheet and think about how you and your family are going to survive from a cash flow perspective, skipping the
Hmm.
business from a cash flow perspective. And then do you on your personal side need to help fund your company? And that also relates with your personal finances, right?
Yeah, I concur with you on that. On the few calls I've had this last week with entrepreneurs, this has come up as well. Like the lack of just understanding that their current short-term cash needs can be resolved with these techniques that you're mentioning that can be pulled within your own portfolio without having to just depend 100% on like government release.
Yeah. So let's talk about a couple. Okay. First, do you have a HELOC on your home? Right. No, most of us have tapped equity in our homes. I'm sitting in my house in Winchester, which God knows has been tapped more times than I'd like to mention over the last 20 years.
HELOC, home equity, line of credit.
Right. Line of credit. So you could get one of those, have it there, have it ready, have it accessible. Hopefully you don't need it, but have it ready. A. B, look at your portfolio. Most accounts within your portfolio, not all, retirement accounts, for example, cannot be margined, but many accounts within a portfolio can be margined. You want to margin it, probably as little as possible, but up to 70% can be margined. So that is, and the margin rates tend to be pretty low right now. I think we're looking at between 1 and 1.5% to margin your portfolio. Advantage of that is if your portfolio has been around for a while, you don't have to sell things at potential gains that you've hopefully accumulated over the years.
Mm-hmm.
And it's cheap access to capital should you need it, right? With one entrepreneur who had tapped their HELOC with their margin with us, we went in and it was something that was prudent to do along the way, given their business opportunities they had. But we went back and reviewed it and we stress tested, especially during the peak of this market downturn. We wanted to understand how much can the market go down before we're going to get a margin call. So if you have a margin, have your advisor stress test it. If you don't, establish it and at least know what capacity you have there. Know what capacity you have with a HELOC. Next, within your portfolio, look at your portfolio. I mean, no one knows how this is going to break or how long it's going to take to get people back out and about spending money and for things to return. Many are thinking it's maybe longer than we had thought. So that may mean that, and no one knows how markets will react. Markets were low in March. They've since come back quite a bit. It could be a bear market rally. It could be a recovery. We don't know. Most advisors and most economists I've spoken to around the country don't claim to know. So my thought process is hope for the best, prepare for the worst. Mm-hmm. So within your portfolio, not all asset classes are the same. Some asset classes carry more risk. Okay, so have your advisor go through your portfolio, look at the ones that may have more risk than you like to take at this point, and there's opportunities to reposition it. Next, even if your portfolio is, along the way, a lot of positions are at losses. Even if you're not selling or not transitioning your portfolio, you can sell something, book a loss, buy something very similar, be in the market. So if the market rises, you rise. But now you're taking losses that you can use, you can carry forward, you can use against future gains, and it's useful. So I don't contend the portfolio is like your face and you shouldn't touch it. I contend that you should be prudently looking at it.
Yeah.
One more comment I'll throw out here. The big picture things, the entrepreneur, in a married couple's case, the husband or wife is going to be trying to keep their business afloat. Maybe can't even breathe. They're scrambling. This is a case where you can divide and conquer. Perhaps the non-entrepreneur spouse has some more capacity, and that non-entrepreneur spouse that may have more capacity can speak with the financial advisor. And a lot of this stuff is, frankly, it's interesting, but it's not brain surgery. But a little extra care could really create better nights of sleep along the way. So there are things to do. And we also published another video recently with a bunch of our team members that were talking about all kinds of planning opportunities that can take place within your portfolio. A lot of them are really nice twos. They're not survivals, but they're really nice twos. So that's one where dividing and conquering can be useful during these times, and the benefits will be had for years.
Yeah, and I think that's a key point here. And one of the things I think we mentioned in the other video is that if your financial advisor today, whoever that is not considering not just this last CARES Act tax changes, but like the ones that happened in December and the Secure Act and the ones that happened 2 years ago with the Jobs Act, is like, what are they doing? Like there is so many opportunities to take advantage in a good way, like to resolve your short-term cash needs and better planning happening right now than 3 years ago. So I just wanted to point that out because it's really important.
Totally agreed. There's a lot of the comments we're making are for the entrepreneur that has built up some wealth outside of their business, right?
Yeah.
And the theme is not location, not the triple location, but liquidity. Yep. And any other KPI doesn't ultimately in the short run matter. Liquidity matters. But try to get liquidity in a prudent manner, right? And a thoughtful manner and a tax efficient manner, hopefully along the way. So as an entrepreneur myself, and granted, I'm not fit to carry a lot of entrepreneurs' briefcases as it comes to being entrepreneurs. I've met some amazing entrepreneurs along the way, but I've learned a lot from them on the business front. I just think they should definitely make sure that they go to their financial advisor and press them, make them earn their keep, and have them help them with a number of issues that are taking place right here and now. And the benefits will be reaped for years to come.
Yeah, I couldn't agree more. I think if you are emotionally stable at home in your own personal thing, you'll be making better decisions for your business no matter what.
I'm in total agreement. And to all my entrepreneur friends out there, I gotta tell you, my hat goes off to all of you guys. You guys inspire me every day of the week. I've been on a number of calls with a bunch of you over the last month, doing triple duty, more so than we usually speak. But I've learned a lot, and I see a lot of amazing people out there doing the best to save their businesses and to help their employees as much as possible. And hope we'll all get back on our feet at some point, and we will rise, and we will be better than ever before. No doubt.
Well, Mike, thank you for your time this morning. We're gonna make sure this message gets passed around to all our entrepreneurs.
Thanks, Jordi. Appreciate it. Have a good holiday weekend.
Thank you. Have a good day.
Okay. Thank you.